Hey there, guys. We got a lot going on in the cryptos as well as the stock market and pretty much every other market. So we're not going to waste too much time. We're going to go right in the meat of the matter. This is the Ethereum Classic 1 hour chart, but I did put a community post out yesterday showing that a couple of our coins have actually broken their major supports, which would have been the lows of February 24th for most of the coins. And for some of them, it was actually January 24th. For Ethereum Classic, it will actually be January 24th. It's one of the few cryptos that had its low on that date. But we had Chainlink and Polygon both break their supports. So those have both invalidated their upside setups. Just to summarize where we were as of our last update, we had a clean, well, I wouldn't say clean, but we had a clear three-wave pattern up, A, B, C. In most other cryptos, we had our low on the 24th. So we could call that also an ABC corrective pattern up. And we were looking for a relatively deep fourth wave retrace to get us complete in a leading diagonal structure, which would have called for a higher high for fifth wave. But we've pulled back so far that we are within pennies of support. Well, I exaggerate, not quite pennies. There's two supports here. We have the low of the 24th of February, as well as the Jan 24th low. I would look for us to break both of them in one fell swoop if we are to follow the red pattern. What we have so far is a pretty clean 5-wave impulse down, as we're looking at on this picture right here. So we could call that 1, 2, 3, 4, 5, and we had a bit of a bounce. So for most of the coins, the bounce happened right here around April 16th and a few days after. In Ethereum Classic, we may be able to count this bounce as a second wave better. Either way, it's looking like we're already in our third wave down. So if you were looking to exit, hopefully you've already done that so far. And when I say exit, I don't mean dumping all your coins, unless you had something else you're going to invest or buy. For me personally, I've unloaded 50% of my positions with the expectation to buy the dip once we get our lower lows. So what are we looking for in the near term? Well, based on what we've seen, let's presume that the April 17th low is the first wave, and we've had a very shallow second wave. Our third wave should get us clean through $20. We should be able to get down to $13, maybe lower, just on the third wave alone. Ultimate bottom could be well below $10. Again, this is the linear chart. The logarithmic chart counts a bit differently, but Ethereum has had exaggerated moves just because, well, you've seen in the past few weeks where Ethereum kind of leads the way. So as I've mentioned to other people, if you guys aren't following Ethereum Classic closely or don't really care to invest in it, I would still recommend looking at it just because it seems to signal it seems to signal changes in sentiment earlier than most of the other cryptos. Doesn't necessarily mean that the red pattern, or I'm sorry, the green bullish pattern has invalidated yet. That doesn't happen until we break 2340. So I got that right below. Again, we hit as low as 2472, so we're not too far away. I expect this to fall relatively shortly, as have in other cryptos. So that's where we are short term. Long term picture, nothing really has changed. It just means that our red pattern is very close to becoming the primary count. When we look up close, you see I have an alert set there. The major support is actually a little bit lower. Again, it was the January 24th low that I would have as our official support point. So about 20, 21, 45, something like that. If we break that, we've got ourselves I wouldn't say a one-way ticket, but at least a round trip ticket down to $14 or lower. As I mentioned, the small term, short term picture, we have targets as far down as the $2 mark. I can't see that happening just because of the equivalences we have here. I could see us going into the mid $7 range. That's what this whole blue box shows. This is based on the fact that we have an A wave and a B wave bounce, and that our C wave is in progress. It definitely looks more like a diagonal kind of setup. So what that means is you got a 1, 2, 3, probably the third is down here, really big fourth wave bounce, and a fifth wave to finish things off. If we use our standard diagonal projections based on the 1, 2 that we see here, that does project a bit differently. It shows that we've actually already gone more than deep enough for this to be complete. However, if I take the bottom right here as a third wave and we take our fourth wave bounce into account, well, we shouldn't get too much lower. We could break $20, $14 would probably be about as far as we'd expect to go. So we're going to see what happens. This is a little tricky to predict, but as I've been mentioning, Ethereum does blow off pretty quickly once things change, and it does seem to lead the way. I remember middle of 2021, spring 2021, made a pretty good haul on that just because Ethereum Classic exceeded pretty much everything else. Historically speaking, these pullbacks are typically quite short-lived. So you expect to see a pretty sharp pullback, a pretty sharp reversal. We were down to the $3 range, 321, March 2020. That was the everything crash. Within about a month or so, we were back up to 740. And well, it wasn't that long before we back up to $18 plus. So what I'm going to recommend is, again, if you're, for most of you guys, it's going to be better just to hold through whatever correction we have. Might see a ferocious red candle down to finish this off. It's the same kind of thing you see in, honestly, pretty much any asset. You have these red candles down and you have a sharp reversal to start us up on the next leg of the rally. I don't see any reason to believe that we're seeing that we're going to break the setup. Anyway, we still have our MACD divergence, although we somewhat broke it. I expect to see a bit more of a divergence setup in the small term picture, short term picture. Once this reverses, it could be pretty crazy. So again, I would recommend not panic selling. It may actually be a good time to start considering your buying plans if you're trying to get more of an allocation of Ethereum Classic or any other coin. And as I always recommend, if you like one altcoin, learn to like 5, 6, 7, or 8 of them. Have a bunch of them. Bitcoin and Ethereum are different, but if you have altcoins, it can be very high risk, high reward. You never know when they're going to pull the plug on the project. So always diversify, not just with the types of cryptos you have, but also when you make your purchases, buy in multiple tranches. So I'm going to have plenty more updates coming our way. It's going to be an exciting week for both the crypto space and the S&P 500 and the Dow, which I expect to hit a lower low sometime during this week. And that should mark the end of our multi-month bear market, almost a 5-month bear market. Should be an exciting summer ahead. Subscribe so that you don't miss my future updates. And if you enjoyed my video, don't forget to give me a like. Till next time, thank you for watching and happy trading.